Shares of FMCG major Hindustan Unilever surged around 3% at closing on Friday after the company's Q3 numbers exceeded street expectation. Most brokerages remain bullish on the stock as they expect the company to overcome near-term headwind. The stock closed at 2,322.20 Indian rupees on the BSE, up 60.60 points or 2.68%, despite the overall mood of the market being bearish. It opened at 2,282 Indian rupees as against the previous close of 2,261.60 Indian rupee. The stock touched an intraday high of 2,333.05 Indian rupees and a low of 2,250.60 Indian rupee. Its market cap stood at Indian rupee 545,622.08 crore at closing. The company on Thursday reported an 18.6% year-over-year growth in consolidated net profit to 2,297 Indian rupees crore for the quarter ended December 2021, compared to 1,937 Indian rupees crore during the same period last year. Sequentially, net profit grew 5.3% QoQ, up from 2,181 Indian rupees crore in Q2 FY22. HUL's revenue from operations during the quarter grew 10.25% to 13,196 Indian rupees crore. While domestic consumer growth remained steady at 11% during the quarter, the underlying volume growth stood at 2% compared to 4% last quarter as rising inflation and increase in commodity prices continue to be major headwind. Volumes in the rural market slipped into the negative category. ICICI Securities maintained its ad rating on the stock with a price target of 2,500 Indian rupee. The task is a tough one, on mid to long term while navigating multiple challenges. Firstly, supply-side inflation amidst slowdown is a tough situation to be in. Any price hikes will have a visible impact on demand, it said in a report. Secondly, we believe there are multiple intermediate markers which leaders like HUL are expected to deliver on: steady premiumization and category development, enhanced digital capabilities including e-commerce salience, D2C brands, and improved reach. As price lever will have its limitation on guarding margins, the intent is to further drive cost efficiency. Balance between cost rationalization and investing for the future will be key, it added. Yes, Securities and Centrum Broking also gave the stock an ad rating with target price of 2,587 Indian rupees and 2,628 Indian rupees, respectively. Motilal Oswal Research gave the stock a buy rating at a target price of 2,750 Indian rupees with a 22% upside, as it sees earnings returning to the 15 to 17% CAGR witnessed in the pre-COVID period. Two factors have held back HUVR's performance over the past few quarters, namely higher material cost pressures vs other staples, especially with all its three largest categories witnessing sharp input cost increases, and a slower than expected recovery in the high-margin discretionary portfolio where HUVR is over-indexed. Both of these are likely to put pressure on earnings over the next 2 quarters as well, especially given the steep increase in December 2021 as well as some impact of the third COVID wave in Q4 on the discretionary portfolio, it said in a note. However, on the positive side, its operating margin base is favorable for the next 3 quarters. Continued market share gain in 75% of its portfolio is encouraging. The high-margin discretionary portfolio will return to normal, and potential increase in government allocations towards the rural sector in the upcoming budget could provide a much-needed fillip to demand, it said. IDBI Capital also maintained buy rating on the stock with a revised target price of 3,098 Indian rupee. Edelweiss also retained a buy rating on the stock with a target price of 2,960 Indian rupee. Emkay, however, gave the stock a hold rating with a target price of 2,450 Indian rupee. Management commentary indicates continued moderation in demand trends, more accentuated in rural markets. With inflation further inching up in Q4, management expects margins to remain under pressure, Emkay said in a note. HUL has taken significant price hikes across its portfolio, which should limit the margin hit ahead. We expect HUL to maintain margins at around 25% in the near term. Despite recent underperformance, the overall growth outlook remains muted amid moderation in rural demand and high inflationary pressures, it added.